Hello there. We are back to you with Jay Granieri over here, and we're going to do a little bit of a market report of what's going on. It's December right now. Everybody is getting ready for the holidays. So, Jay, what do you see changed in the market?
Well, I always say that when you want to know kind of where you are at today, you kind of have to look backwards a little bit to understand where we're kind of coming from. We're coming out of a 4-year cycle of just booming success with real estate.
Yeah.
The rates were amazing. Money was fairly cheap. And the home market, COVID affected a lot of people negatively, but the
Right.
one thing that it really didn't affect that hard was really the real estate market. Everybody went on this sort of buying frenzy. And so where we're at today is I think there's a little bit of a shock and awe.
Right.
Where people are really trying to hold out for the rates to deliver themselves a little lower. And we've been teetering back and forth a little bit,
Yeah.
teasing everybody. But I feel as if, and I think you might agree by hearing some of the commentary from the news, this is probably going to be the new norm, where
Right.
we're at right now.
And people need to digest it. People need to get comfortable with this is the rate.
Correct.
So
Correct.
I'm telling people, if you are qualified to buy now, you will have a better chance of negotiating with sellers, lowering prices, getting credit.
Correct. It's gotten back to sort of real estate, of the past where there's just more negotiation. So
Right.
you're going to have a more skilled, real estate professional representing your best interests. You're going to have to go into it, kind of holding down to your guns a little bit. Your inspection process is going to have to be much more thorough.
Yes.
And of course, your lending process is going to have to be much more thorough.
Yeah.
Your checking and balances of everything that's going on behind the scenes. Before, it just seemed like everybody was qualified and money was easy to come by.
Correct.
And it seems to me today, there's a lot more scrutiny, a lot more subjectivity on exactly who is the right type of buyer, who's the right type of, what's the right type of property on the market. And, price is going to definitely depend on that.
Yeah, and I must say that right now, after the NAR settlement, and now that it went into, it was signed, right?
Yes, it was.
It was signed. It is extremely extra important to have the right professional representing you.
Correct.
If it's negotiating the commission, is it you going to pay or the seller is going to pay your buyer agent?
We have never been in a position, at least down here in Florida, and other states and other countries,
Right.
different kind of ways that they handle the buyer side of deals, but even the seller side. The biggest thing that I see with the new NAR settlement, and for those people that don't understand, is that it basically gave more options to both sides of the parties. If you're a seller, now you have that option to determine, am I getting the right value for the property? And therefore, I have the determination of making the decision on how much commission compensation I want to give out based on that offer.
Right.
That's something that hasn't really been the case. Typically, the seller negotiates the commissions, compensations with the listing agent, and then we distribute a certain
Correct.
amount.
Yeah.
Now the seller's a little bit more in the driver's seat, and I think that empowers the consumer base a little bit better. And I think it's a healthier market for that reason.
Right. So it's everything on the out there. Everybody knows that you can negotiate, and people are negotiating. I see contracts, and I see that going on.
Yeah.
I want to share with you something. I was yesterday at the real estate conference with the Jewish Federation, and there were some people that on the panel over there, and something that was shared that shocked me a little bit. It used to be usually that new constructions represented about 15-20% of the transactions. They're saying that right now they're representing about 50%
Wow.
of the transactions. And I said, okay, why? And what we think why is that during the time that you're talking about, during COVID, where everybody was churning and buying and changing homes and getting a 3% mortgages, right now sitting on a 3%, why should they go to a 7%?
Correct.
So it holds the properties that we have, that we've had for a while. They're not turning like they used to?
So there's a catchphrase out there, the silver tsunami. You probably heard about
Yeah.
this, right? Right.
Yeah.
So it's the generational changes that we're experiencing in the marketplace. Our baby boomers are aging up. Obviously, our millennials are getting to the point now where they're looking to buy homes. But the largest buying and selling class is going to be the baby boomer class for the next 10 years, without a doubt. That generation is plush with cash. And originally, when money was cheap on loans, it was you could kind of go either way, and that's probably why we're seeing that.
Yeah.
Where now, especially in a new construction scenario, where predominantly those are cash purchases. The flip, where they would go to a conventional lending side, is really now being challenged a little bit. Do I want the interest on my money versus just paying the cash and putting it
Right.
into the house? And then I think that once we sort of settle down and understand that this is kind of the norm, that really a 6% market is really a healthy market. I think we'll find more people going back to sort of the traditional way of just understanding that loaning
This is
money.
what it
This is
is.
it is. This is what it
This
is.
is what it
Yeah.
is. Yeah. And a couple things that I found out that they were interesting on Maria Bertaromo. She does the financial news every morning. That the age of a home buyer has been risen a little bit
Yeah.
because the other people, like the silver people, have a little bit more money.
Correct.
So they're the one that are changing hands. What does it take to buy a $400,000 home? About $100,000. So when you do the calculations,
Yeah.
it's where things are. But if you buy now, you negotiate,
Right.
and down the line, whenever that time is, refinance it.
So I think that once again, if I don't have a silver ball here or a crystal ball to look to the future, but if you look at the data on our millennial generation, right? There's sort of this rumor that they were staying at home longer. With their parents or in their parental sort of settings, saving their money. There's a huge abundance of rental properties out there right now, so they're
Yes.
renting. Well, what does that mean? Well, they're just paying a month payment. So hopefully, what they're doing is they're putting money aside. And I believe that in this next sort of 3 to 5 year cycle, they're going to be having a nice little nest egg, especially with a double income scenario,
Yes.
where they can combine their monies and actually invest it into the future. Which, of course, as we believe, the best thing to do is to purchase a property so they gain equity and appreciation for their future as well too.
If I can add to that one, they can save, but if they're trying to save the 20%, that can take a very long time.
True.
Meantime, they're paying this $3,000, $4,000, and $5,000 a month in rent. If it takes them 3 years,
Yeah.
imagine this is $60,000 a year times 3. It's $180,000 a year that went bye-bye, where they could have gotten a
Right.
5%
Right.
down payment, do the mortgage insurance, and build up some equity in their own home.
Well, I think the great thing is that what I've seen, at least from a partner like you and Fairway, is that you're always reinventing new strategies in loans and making it more obtainable to get loans.
Right.
So you're not going to hear an argument from me. Home ownership, absolutely, hands down, is always going to beat renting. It's just mathematically, it just doesn't make sense. You're never going to get the appreciation
Right.
you return. You're only making somebody else, more wealthy. So yes, if there's an aggressive loan programs out there, and obviously, I know Fairway is offering things like that you're going to be able to, have a home ownership a lot earlier than wait the long run.
Absolutely. And if I remember correctly, when you were buying your home, you were asking me, Racheli, do you think that this is the right step?
Right.
And I said, go for it. Was it a good decision?
So, a little personal anecdote of my history. When I purchased our first home, now you don't see these prices as they are today.
Yeah.
But we purchased our first home for right around $200,000, and today the exact same neighborhood that we purchased in, the home was worth about $600,000 to $700,000.
Wow.
So I absolutely am a big advocate. It's always, when you're a first-time home buyer, you're always a little nervous the first time.
Right.
But the processes, the hand-holding that I think professionals like yourself and myself that we try to do is really make it as easy as understanding that this is the right step to make for your future, for your financial future, for sure. Certainly has helped me and my family.
Absolutely. You need somebody, a guide by your side. And yes, there are all kinds of online everything, AI, everything. But when it's time for somebody to understand you and to guide you, I don't know if you can push a button and get that.
Yeah, it's
That
risky. There's a lot of, listen, technology is going to help us out in a lot of
yes.
different ways. And we're using it ourselves. However, I use a little bit of this and a little bit of that. I do use AI and some algorithmic type services that can help me get some valuations, but I always go back to the books myself and really take a bigger, broader look.
And check
And
it.
check it. So when I present something to a seller on their value or to a buyer on a comparable, I'm giving them a little bit of each and letting them make the decision ultimately.
Yeah. And another thing that Fairway is doing, like you said, staying a little bit ahead of the curve. We started already with the new loan limits in Broward, Palm Beach, and Miami-Dade counties. They're at 800,000, a little bit more than $800,000 to have a conventional loan. So you don't have to go to the jumbo world, which have different guidelines, have a little higher interest rate, different criteria to qualify for. And another thing that I want to talk about is this was shocking to me. We have right now sitting in the United States $1.17 trillion in consumer debt. That's the highest it's ever been. In 2018, it was 820 billion.
Amazing.
So we are growing a little bit too fast, and people are finding themselves, yes, they're sitting with a 4% interest rate on their mortgage, but they're paying 25% on their credit card and consumer loans,
Yeah.
which if you do the balancing between the two, you might be better off either to refinance or to do a home equity line, and we help people
Pay down the
do
debts.
that.
Yeah. Yeah. I think that the spending frenzy got so out of control
Yeah,
that people lost a little bit of their perspective of
absolutely.
really where they are at financially. What is great is that we have seemed to receive a big bump in equity, so there is that opportunity to
Yeah,
do HELOCs and,
yeah,
and hopefully pay off some of the debts that will really extend your credit and extend your opportunities for
yeah.
other buying
Because
possibilities.
it's not a secret. The better your credit score, the better everything costs you. Credit card interest rate, insurances, mortgages. So if you're sitting on a ton of debt and a ton of equity,
Right.
you want to maybe merge and do something with them
Yeah.
that will make financially a better situation for yourself.
100%. A financial advisor could give you that kind of guidance.
Yeah.
I've been doing it myself as well right now. I have two properties. We have we're plush with equity on one,
Yeah.
and we just have some bills that we want to pay off, and even some improvements to the other house. And why not use one
Yeah.
property to help the other?
Absolutely. And now that we have all this equity, let's use it to build.
Yeah.
So I think that this was wonderful. We talked about a few of the things. Prices are going a little bit down. How many houses are staying on the market a little bit longer?
Yeah, yeah.
We,
Price per square foot, I think that's an important
yeah.
point to bring up. I think that, what you're seeing a lot now is this sort of boom of new construction happening all over the place. You have to understand that the properties that you're seeing built today were really purchased 2 years ago.
Right.
And these builders, really kind of set the market.
Yeah.
In Broward County, certainly in East Fort Lauderdale, we're seeing new construction averaging around 1,000 a square foot.
Wow.
A property that's in sort of perfect condition, selling at somewhere between 700-800 a square foot. Certainly, that's a lot more than what it was in the past. But you got to consider the fact that everything's gone up. Construction costs have gone up. Land value has gone up as well too. So people, should not be surprised when it comes down to purchasing a property.
Yeah.
That there's going to be a sticker shock, and they have to once again understand that the market has evolved over a very rapid amount of time.
Yeah.
Last 4 years, where most of these homes have received a 30 or 40% equity pop.
Absolutely. So if you want some more information about the market, what house would fit you, Jay is the guy. If you want to finance that property, what are the options that you have for that property to buy it? To buy it with tax return, to buy it with bank statement, to buy it with cash flow. Different properties, different needs, different programs. And we invite you to call us So thank you so much.
Thanks, man. Happy
Have a
holidays.
nice holidays. Bye.